Hi, this video is about how to conduct an empirical pricing analysis in relation to a pricing audit or a pricing diagnostic that you may run in your company. So, many times when we talk about pricing, we talk about complex studies like conjoint analysis, Van Westendorp analysis, MaxDiff. Those are all studies for you to do once you have a pricing hypothesis and you're running a statistical method to get feedback. Now, in most companies, you're going to have a lot of pricing performance information that is just not being measured. You're going to have conversations from sellers. Sellers are going to say, this is working, that is not working, pricing is a problem, or it is not a problem. Executives are going to have an opinion. And surprisingly, nobody's looking at the pricing performance at all. They're just looking at top line revenue numbers. Did we make the number? Did we miss the number? What is the margin? And they look at like a top line price point number, but they're not going to look at how are the packages doing, are they doing well or not. And that is easily available in CRM data. So I've created a anonymous data set here using Claude, and basically what this is similar to what you will get as a CRM output. You have account names, total contract value, number of seats sold. With dividing both of these, I've created a column for dollar per seat. Dollar per seat is what you want to track at the board level in 10Ks, and dollar per seat is what you also want to look at for a per package or per tier performance. Then in this data set, you have what is the package that was sold, how much discounting from list price actually happened in order to sell this, which quarter was this sold in, and what was the total sales cycle length from opportunity to close. Generally, you'll have other data in a company and you'll have to munge it a little bit to get it to this level. But now that you have this, let us see what story that this tells. First of all, if you look at total money obtained from these three tiers, you will see that most of the money is coming from Elite, around 6.5 million. Then 1.5 million is coming from Essentials, and around 657K is coming from Pro, which is a little bit odd because you would expect Pro to be in between Elite and Essentials, given that it's generally the price point is in the middle of your entry level tier and your highest tier. Maybe there are legitimate reasons for that to be the case, but it is definitely an observation that we'd like to drill down on. So another pivot, here is another pivot table analysis that has all of these three plans and then a lot of those stats here. The amount of time it takes to close these deals, the average discounting percentage, and the dollar per seat, average dollar per seat for those tiers, as well as how many of those packages were sold. So if I look at average dollar per seat, I think essential this discount rate is 5% from list, and the average dollar per seat is 300, which is good. Pro is discount rate is 10%, which is what I expect, and the average dollar per seat is around 500, which is closer to what we set. So that is as expected. But only 8 of the deals had Pro actually got sold, which is interesting. And then my list price for Elite is actually much higher, and I'm seeing that there is a very high discounting happening on the Elite plan. And there are about equal number of Essentials and Elite that have been sold. So Pro is not selling, and while Pro is not selling, Elite has high discounting, which is a symptom that Pro is not fitting customers and they end up buying Elite and then discounting it a lot, which is not really the original intention we had. If this is happening, then you're doing ineffective pricing, right? The people who are buying the Elite plan are not necessarily from the target segment for which the Elite plan has been designed. Therefore, many people are going to buy this plan heavily discounted because perhaps something in the Pro was not working for them and they had to get a lead for a feature that they wanted. Now they're going to have a lot of shelfware in those plans, and adding on usage data to this over time will help validate whether there is a lot of shelfware. And if you sell the plan like this, it also blocks your upsell later on because you cannot keep up with the growth of the account. This creates churn problems and net retention problems. You always want to have packages that are well designed for the segments and then that grow along, that help the customers increase their usage. I'm seeing some issues here, but I'm also seeing that when Pro does get sold, the time taken to sell the Pro deal is much higher than Essentials or Elite. And it shouldn't be the case. if it should ideally be between essential and elite. Now, what I can do is have a conversations with my sales team, have a conversation with my strategy functions, marketing, as well as the CEO, and have a hypothesis for what they think might be happening and provide this data to either validate or invalidate some of those conversations. By merging the qualitative discussions and your hypothesis of what is happening in pricing, and then actually looking at this data, now you are able to have a more holistic pricing audit without necessarily looking at any Van Western or from conjoint analysis. At least you have some data to go off of to refine your pricing and packaging, after which you will do further market studies. But generally, we talk about how pricing is performing, we talk about shelfware, we talk about high discount rates, and we get the question like, how do we figure this out? This is a very simple way for you to figure out what's happening based on your sales data. So I hope this was helpful, and happy to answer any questions you have on this.